Welcome to Business with Beers, a podcast for business owners who want to scale their business to massively grow their income and contribution by investing in people, process, and technology. This week, we've got an awesome guest, MC Laubscher, the cashflow ninja and the founder of Producers Wealth, a 100% virtual wealth building company. In this episode, MC and I talk about how to become your own banker, the benefits of infinite banking and what that is, and how it's better than traditional banking. And ultimately, how do you leverage the equity in your life to grow your wealth and cash flow? And listen to the end, MC has a great analogy about having a stable of horses as part of your wealth building strategy. Here we go. Welcome to the show, MC.
Great to be here. Thanks for having me on.
Yep. Well, this wouldn't be Business with Beers if I didn't ask you. It's not COVID and we can go to a bar. What are we drinking?
Well, I'm gonna go with a beer since it's the beer.
You don't have to, but that's okay.
Actually, one of my favorite beers in South Africa is called Windhoek Lager.
Okay.
So an ice cold Windhoek Lager is just delicious.
Can you get that in the States?
I've not been able to find it here. I'm sure there's someone that could probably come up with it, but it's actually a Namibian beer. So I'm originally from South Africa, but it's a Namibian beer. They have some really good beer. Tafel Lager is another one of them, but Windhoek Lager is really
okay.
Really
I'll
good.
have to figure out how to spell that and try to find one. So awesome. So yeah, if you could share your story, who you are, what you do, and take it from there.
Yeah, absolutely. As I mentioned, I'm originally from South Africa. I came to the States about 20 years ago. It's crazy how time flies when you're having fun. So around 2001, I came over. I actually played sports over here in a city-based rugby league, a national league. So it was a lot of fun. I got to see the country, travel a lot in the United States, playing different cities every weekend. Made a lot of friends all over the country. Eventually was part of the U.S. men's national team player pool up until 2007. So really enjoyed that time. And as I was traveling around and playing sports, I always loved history and economics and very curious, learning new things. And actually, my mom put Rich Dad, Poor Dad in my hand when I visited her in South Africa, and I started reading that. Just huge paradigm shifting kind of book. We all grow up with different models, right? And my models essentially was shattered and a little bit disrupted growing up in a very interesting time in South Africa. So we grow up, and whether or not we know it, we're indoctrinated one way or another. And we have all these models which helps us to make sense of the world. Mine got completely disrupted. So I was always open to learning new stuff and learning new models, and took a deep dive after I read that book and started reading other books like The Creature from Jekyll Island. And then I started seeing, man, this is how money works, what money is, how the banking system works, how financial institutions work, how the global financial system is set up. And the model that I actually used, which I found fascinating at that stage, is I loved history. I loved economics. When I started looking at monetary history, it all started to make sense. And all of a sudden, the world started to make sense. So I've used that kind of framework to view a lot of things in. But essentially, after I bought the book, I took action right away. Young kid, bought my first property. And initially after well, actually the first month I got renters in there. They paid rent, and after paying all of the bills, there was still some extra money left. And it was just an amazing moment, because I'm like, man, I just learned something new. Yep. I took action, and now there's cash flow. And the first question, of course, then becomes, how many times can I do this? Yeah, just got to keep doing this as many times as possible. So that was the big thing. And then the second thing is I have actually reread that book every year. And I think the third or the fourth time I actually read it, I looked at it and started paying more attention to financial statements that were in there. Because initially, you get so excited about, hey, the wealthy don't work for money. They create assets that produces money, and real estate's great, and cash flow. Then you look at the statements, and the second big light bulb moment that I had was, man, if I look at this, a creditor and a debitor statement, and I look at all these, the flows and the cash flows, all of these liabilities that I've got on my financial statements are actually the assets of the bank. And then my mind started turning a little bit and saying, man, you got to figure out how to become the bank.
Okay.
That's the big thing here. How do I become the bank? So between that and then figuring out the rest of the stuff of leveraging debt, leveraging taxes, and leveraging inflation, kind of bringing that all together, I incorporated that in my framework as an investor, investing in real estate and businesses and so forth. And then I started also a company back in 2015 called Producers Wealth. We were a full-on 100% virtual wealth firm, helping with strategy and setting up actually infinite banking policies, which we utilized and leveraged some of the strategies that I've learned. And then I also, sticking on the curious topic, I have a podcast called Cashflow Ninja, where I just want to learn from other folks and continue to learn many different ways to create, grow, and protect and multiply cash flow.
That's great. Yeah. Great story. So how many properties did you end up owning when you started buying them?
Yeah, so I was in the single family game for a little bit. So I actually didn't outgrow over 10 properties at that stage. I kind of realized at an early stage, as I was acquiring single family, that I wanted to get more into multifamily. Okay. So I found the syndication model and partnering with other folks. So I kind of made that pivot very quickly, where if I listen to a lot of other journeys of folks that, they own quite a large portfolio of like single family, and then eventually they made the switch. I kind of like made that switch earlier just because I'm just not cut out for phone calls about plumbing and toilets and that kind of stuff. So, and I knew I had to grow myself into basically handing it off to a manager. So I kind of looked at this and said, well, I'm going to eventually grow that portfolio, and then I'm going to get into multifamily anyway. So I made that switch a little bit earlier.
Yeah, we're going through that same thing now with the single families, and it's a lot of work to do. Like, one deal is a lot of work, and if you're only making $200 a month, and it's a lot of time, right? And then the returns really just aren't there. It takes the same effort to do something big as it does to do something small, right? So that one apartment building you can buy with 50 units is going to take the same work as probably 2 homes you're going to buy. Same negotiations, same banks, same like due diligence, right? All that's the same. It's just a bigger number. So that's great.
Yeah, and I also what I really enjoyed doing was partnering with other folks, and I realized at that stage, now that I look back, it was just by accident, because I was a rugby guy. I was part of a team always. I loved being part of a team. I understood that there was different skill sets that everyone had, and everyone's bringing something different to the table when we're on the field on Saturday. So I kind of took the same approach, and looking back, I was like, man, that was not a bad move, because I was looking at, hey, who are better investors? Who finds the best deals? Let's just partner with them instead of like trying to compete with them. And, let me focus on doing other things and building other things, and then finding the right people in certain areas and then partnering with them. And that's kind of been like the model that I've taken with me in my other investing in investments and partnerships. So I've always tried to find, like, for people, because I found like if you can find someone that's an absolute ninja in their space, flourishing, they're the go-to person in that particular space. They know more than you would ever need, be able to learn in that space. Why not partner with them and support them and figure out how you can help their cause and partner with them instead of trying to recreate the wheel and jump
doing
into
all your
space.
own and not be able to scale it, right?
Yep.
So that's awesome. So 2015, Producers Wealth, talk about infinite banking. What is infinite banking?
Yeah, so infinite banking, and I mentioned like becoming the bank is like a big part of it. So, but essentially, infinite banking allows you to implement some of the banking strategies on a personal level, you and me level, on a human level, instead of just leaving it to institutions. We all know, like, the traditional banking system. If you just look at an old bank, you would have a deposit side where we would go put money in a bank for a reason. We used to be able to have more reasons to do it, but they still have online banking and wires, and there's still a need for them. So we would deposit money into a bank, and on the back end of the business model of the bank, they would take in capital from depositors, but they would also then create products, loans, and make those to business owners, investors, mortgages, student loans, credit cards, and so forth, with a very, very high return. And generate cash flow on the back end of it. So I looked at the business model and looked at the power of this business model. And through the infinite banking concept and strategy, we actually design and set up overfunded, dividend-paying whole life insurance policies with a mutual insurance company, where you can be the depositor, depositing cash, your cash, into a policy that's structured correctly. And then on the back end of this banking system that you create, you can access capital and leverage it by borrowing against the cash value that you have in the policy, and then invest in real estate and businesses and so forth, things with a higher rate of return, and then put the returns back into the policy on the back end. So there's an infinite flow of capital into the policy, on the back end, out of the policy, into more assets, and it simply helps you increase the velocity of money. And I love the terminology. My mentor, Nelson Nash, which he was very intentional with the language that he used and the words that he used, and that's why his book was Becoming Your Own Banker, not Become Your Own Bank. Because he said it's a process. It's always a learning and a growing process of how to do this better, how to tweak it better, and infinite also, meaning that it's a continuous activity of cash and of learning and of growth and so forth.
Okay. So for everybody, right? So you get a whole life policy, right? It has to, and there's a mechanism that you can overfund it, right? So you build your cash value quicker, because in the beginning, right, a certain percentage goes towards death benefits and all that, right? So you overfund it, so it builds it up quicker, and then it pays a dividend, because they're then taking the profits, right, because from selling these policies, right, and then giving it back to the policy holders, right? So that's the structure, and then you pull money out through policy loans. That's correct.
Yep. Yeah, and for real estate investors to understand, just to put it into perspective, because a lot of us already know sort of the strategy which you and I are describing, but we've seen it in different forms. So for business owners, we know that we can collateralize, for example, our business and the equity of our business to get loans from a financial institution. So we could put like the receipts of the business, the assets of the business as collateral and get these loans. We actually had someone on our network too, which started buying the building from which his business operates, and then buying other businesses, which I know in your network, there's a lot of folks doing that right now, including yourself. So you could do that. And then with real estate, you have, when you have properties, you build up equity into the properties. So how do you access the equity in the property without selling it, right? And rolling it into another one? You can do it through a HELOC. You can do it a cash out, refi, and so forth. You can do the same thing with gold and silver and artwork. You can borrow up against the value of those commodities, usually up to 50% of it. There's certain custodians that will allow you to do that. So if you have gold and silver, you can borrow up to 50% of it, and then use that money to go and buy cash flowing real estate, pay back the loan, and you still have the gold and silver, and you still have now the real estate that's producing cash flow for you. That's essentially how you can cash flow your gold and silver, and acquire another hard asset. You could do the same thing with cryptocurrencies. We're all familiar now with strategies more and more in that space of doing it. You could do it through other banking products. A mentor of mine actually used to do it in the 70s with CDs. They would go into a bank because they paid them like double-digit interest. So they would go into the bank and put in $100,000 in there in a CD, paying 10+%. go in there, get a loan at a lower rate from the same bank, accessing 90% of that capital and buy real estate and then repay the loan that way. We're essentially doing the exact same thing with an insurance contract, which is structured for maximized cash. Yep. So just like with real estate, there's a set period of time that you make payments. You have a mortgage for 15 or 30 years. There's 15 to 30 years of payments. With an insurance contract, you can set 5 years, 7 years, 10 years, 15, 20 years, and so forth, pay into it. Then you own the property free and clear with real estate, and you own the contract free and clear with the life insurance. As you're paying down your mortgage, principal and interest, you build up equity. Yep. Same thing with the life insurance contract. You just do it much quicker. You access the equity in real estate with a HELOC. You access the equity on the life insurance side through a policy loan. And with real estate, I mentioned my story about cash flow. When we pay all of the expenses, let's just say it's a rental and there's money left over. Now it's the profitability of the property on the monthly cash flow. With life insurance, if it's with a mutual insurance company, you get to participate in the profits in a form of a dividend, where the insurance company pays all of the expenses associated with running the company and then distribute the profits to the shareholders, which are the policyholders. And then, of course, the death benefit that you mentioned, if you structure these contracts correctly, the death benefit keeps on increasing, the same way that the value of the real estate property keeps increasing as well, if done correctly. So there's a lot. It's funny. There's a lot of similarities between the two. You could sell a mortgage note, you could sell a life insurance contract, you could do a 1031 exchange with real estate, you could do a 1035 with life insurance, rolling the cash value from one policy into another.
Oh, really? You can,
and there's so many.
Do that, or when would you do that?
We actually do a lot of that with universal life policies, which is a complete. I mean, that's a podcast in itself. But yeah, there's a lot of folks that we're rescuing, try to preserve the reasons why they set those up in the first place in the 80s and 90s. So they set it usually up for a tax-free retirement. Which you can also do through a life insurance policy, structured a tax-free income stream for yourself, a private pension. That's why business owners love it. So we're trying to preserve
inheritance, right? If it goes to, when you die, it goes to a irrevocable trust, right? Then there's no, you're over the exclusion. It escapes the estate tax. Isn't that correct?
Yeah. So you have tax-free. And again, you just have to check with your state the federal exclusion, but yeah, you have tax-free distribution of the death benefit. So they set it up for the tax-free income stream, the death benefit, a great transfer to tax-free transfer to the estate, which for real estate investors too. That's why a lot of real estate investors love these policies. They have it because they need to park their cash somewhere.
Yep.
Then also, a real estate investor might have a large portfolio of properties, but not a lot of liquidity. So what happens if that real estate investor passes away and the spouse or the children don't have the skill sets that investor has? Well, now you're running into a liquidity problem at the estate. So now the spouse and the children are forced to sell off great assets at a discount just to pay taxes.
Okay.
If there's not proper estate planning done, of course. So it serves a lot of purposes in a lot of different ways.
Yeah, so you can park cash right there safely, securely. These companies have been around 100 plus years. You earn, you not only stores there, right, but you earn cash, so it's not doing nothing. And then you can access it at any point through a policy loan to then go out and redeploy, and then ultimately pay back at some point, right, to continue earning.
Yep. Yeah, entrepreneurs, business owners, and investors love it, because think about it this way. You need a place to put your capital. So where do you put it? 401ks or IRAs? Well, now it restricts what you can do with it. You don't have access when you need it to grow your business or grow your portfolio. The other thing also, what's the other option? Well, you could put it in a stock portfolio.
Bonds.
Yep. Yeah, or bonds. But now again, let's just use stocks, for example, or mutual funds. Now you're investing in Apple stock. I'm on an Apple computer now. I love Apple products, but they don't need to raise any more cash from me to finance their business. How about I put it in a position where I can finance my own business? So that's kind of the problem that it solves, where it's in a vehicle that's liquid, growing, tax-free, earning tax-free dividends. having the ability to access it tax-free, and you could use it to grow your business and grow your portfolio, as opposed to positioning it somewhere else, which doesn't necessarily serve those goals of yours.
Yep. And for someone doing like a 70-30 split or for whatever, like a 3-fund portfolio, if you're familiar with that, with low cost index funds, right? But like, 30% for me would be in bonds, right? But they're only paying right now 2.5%. So like I could take that 30% and stick it all in this policy and earn, double that, right?
Absolutely. And I look at it the same way. If you let's just take 100 and you take your age and take it off of that, then you can look at what would be allocated towards more quote unquote controlled riskier options, investments, cash flow, and so forth, where the conservative stuff, you still need that. This is a great way to position cash, and then also having some obviously precious metals in that more conservative sort of part of your portfolio.
Yep. So can they got to speak to an expert, right? Someone like yourself, not any insurance agent would be able to set up this policy.
So this is a very specialized structure and setup. So there's many ways that you can buy things in life. You could buy at a retail. We don't like to buy retail for anything. Or you could buy wholesale and buy it as the pros buy it. So this is not structured like your retail insurance that's sold to the general public. Probably 99% of them. So it's structured specifically for the cash value and the cash portion. I always say, especially when it comes to discussions of insurance, there are ways to protect your value, your human life value, as we call it. And that's actually when you get death insurance, as I also call it, which is term because essentially you have to die to benefit from it. But there's actually life insurance, living insurance, which is which produces a great place to position capital. And it has to be structured very, very, very specifically. So you would have to work with someone that know how to structure these policies. It has to be set up with the right company. It has to be set up with the right agent that knows how to do that, and it has to be structured correctly. The companies makes a huge difference too, because you have great mutual insurance companies, for example, but not all of them have the right product fit that allows you to do what you want to do. So I always have a philosophy with everything in life that don't try to buy something and then have it fit into what you're trying to do. Buy it already so that it fits into what you're already doing. Don't compromise anything that you're doing. Get something that fits into what you're already doing and that helps to amplify what you're already doing.
Awesome. Great. Well, I'm excited, like I said, for mine to start, and I already got plans of, continuing to grow it. And you can look at multiple family members too within your own family, and multiply the efforts as as it makes sense. So
it's a great family strategy too. So for example, you could set up a family bank. I've set up a family bank for my family with several policies for my wife and my children, and we refer to it as our family bank. It's funny how when you start to call things a certain way, you start to think in it. Like if we need money to invest in a business or invest in real estate or something like that, we go to the family bank. And it's great to eventually start to teach your kids at the right ages exactly how this works, how you pay it back, and teach them the system, which is so powerful. I mean, you look at the greatest investors out there, and even some of the folks right now, which are in the media for a lot of different reasons, they do the exact same thing. They find great places to position capital and buy great assets. They hold it forever. They have these structures in place forever, and they just leverage the equity and borrow against it, right? Collateralize these great
assets. Equity on your life. Right. I mean, essentially, you're borrowing from the policy that's going to pay out at some point, right? You compared it to real estate instead of equity in the business, or equity in your real estate. You're borrowing equity against your life, and so that's awesome. Speak to how are you growing your business? How do people how do you grow the Cashflow Ninja? How do you grow Producers Wealth? Like, what are you doing personally to?
I think like the big thing is to always to try and see where things are headed and things are going, and to position yourself for that. And sometimes it could take a while. Example, Producers Wealth. I kind of had this idea that we're going to just conduct consulting virtually.
Yep.
I looked at this and said, no one's going to drive around anymore to meet with people and spend hours on a golf course.
This is 2015, right?
Yeah, in 2015, and people thought I was crazy. And I just said that, if you look at the cultural trends at that stage, the younger generation, and even the way how technology has impacted us, is we just want our problem solved, and we want it solved pretty quickly.
Yep.
I don't want to spend 3 months trying to figure out how to solve this problem. I want to figure out how to solve it and have someone solve it for me right away. So I said that because of the way that technology has programmed our minds, instead of the old way of doing business, it's going to be online. You're going to have to, for example, be accessible 24/7, 365. So you build out a funnel online for your business that runs 24/7, 365, because people consume content in different on different times, right? Especially busy people. And that's why we use the podcast medium, by the way, too, because busy, driven, successful folks that are very busy, when do they consume content or listen
when they're driving,
to books or podcasts, driving, working out, exactly. So that's why we picked the podcast medium. This is all into 2015, and then also picked the virtual, and then try to build sales funnels that run 24/7, 365. So that was 5 years ago. Now, so almost 6 years ago. Yeah, 6. Time flies when you're having fun. So now you got to look at where are things going. I think that the big thing is intellectual shortcuts that people will be selling. I think the whole way that products and services, for example, are sold right now, I think it's going to transition where it's going to be more intellectual shortcuts that people want. So, and you're going to buy your products and services from those folks that can provide that. So how do I go from A to Z quickly and basically download 20 to 25 years of experience of one person?
This is without putting an Elon Musk chip in your head too.
Yeah, I mean, it's going to get crazy. I mean, we're living in the fourth industrial revolution, but I think like as business owners too, the way that I'm trying to position Cashflow Ninja, for example, which is now an education company, and kind of change the mission a little bit of self-reliance through education, is that teaching that is through education that provides intellectual shortcuts. How do I set up my own banking system? How do I invest in 2021 in certain asset classes? And then providing at the end the products and services that go along with those intellectual shortcuts. So that's how we're positioning for it. I'm always looking at different technologies and AI and so forth. But the core thing that you also want to still maintain as a business, even though we're so virtual, is to be to provide the certain level of personal attention to people.
Yeah, it's the personalized. Video I think is huge in terms of we talk about COVID and its effects, and just the ramp up of video usage. We're talking on Zoom now, and I think for me, if I'm going to meet with somebody, like I want it to be Zoom. I want to see their face. I don't, it's a lot more personal and meaningful, and you can connect, even though you're not in person, right? You can have a very similar experience. At least for gathering information, right? And getting to know each other. Obviously, for more in-depth, relationship building, you need to be in person. But I think you
absolutely.
Can
the video medium is great.
Interesting. So what are some other intellectual shortcuts? It's the first time I've heard that term. Like packages of content, right? That delivers like, this is the end goal. This is how you get there. Is that the idea?
Yeah, because if you think about it this way, and this is an idea that I learned, that the concept that I learned from Dan Sullivan from Strategic Coach too, is that there's so much information and so much free information. You want to learn anything, believe in your ability to figure things out, is what I always say to folks. I even joked the other day, I was at a farmer's market, and I'm like, I would love to homestead. I would love to buy a piece of land and do that. And my wife was kind of chuckling, and she's like, you don't know anything about that. I'm like, I believe in my ability to figure it out. Because of the information that's available. So there's so much information overload. So I'm seeing that okay, people don't necessarily, they're not going to pay for necessarily all of that information. What they will pay for is someone that can package that. And instead of me sitting on the internet for 10 hours trying to figure out something, putting it all together in in an hour or in 45 minutes or in 2 hours or in a small like mini kind of course, and give me that shortcut of basically how to do all of that instead of spending hours and hours and hours of figuring that out. I think people will still try or still exchange value for that. So they'll pay for that. I mean, I just look at how my buying behaviors and purchasing things. If I try to figure stuff out, I was trying to find, okay, who are the folks that are the best in that field? What do they have? What are they putting out?
So you cross reference. Yeah. You want reviews. You do all this research, right? Because there's all this research out there and you want to make sure you're getting like the best value for your money. Right. So yeah.
Absolutely. One of the things, for example, I'll share a funny tidbit with you, but like in South Africa, we grew up with this specific jerky. We call it biltong. And it's really, it's phenomenal. Okay. And you can buy it online. There's a lot of people still selling it. South Africans, especially in Canada and North America, in the United States. But I wanted to start making my own. Okay. So now I'm like, all right, same process. I follow the same process. Am I going to spend 10 hours online trying to figure it out? No, I'm going to figure out, okay, who's the best guys teaching this? Do they have is there an intellectual shortcut which I can learn in an hour or less instead of spending 10 hours online trying to figure this out? And then I'll buy their products too, which is what ended up happening. I found someone that was doing this, so I exchanged value, purchased a very quick, master class, if you want to call it that. But then, I'm going to look at what else this person has. So I end up buying like 3 or 4 other items from them, which is he's selling products, but he provided that intellectual shortcut, which eventually made me become a customer of all the other stuff.
Yep. So for you, it's funnel people through your educational platforms, through Cashflow Ninja, into then Producers Wealth, and then have these packages of intellectual shortcuts, infinite banking, and other ones I'm sure you're kind of working on to then keep them kind of within your circle.
Yeah, that's how we're positioning it right now. So we look at the great thing about having a global audience is listening to what they want. So for example, the infinite banking kind of video series has been great. Folks go through that and then they want to use our service because they got to know, like, and trust us and look at what we provide. And now there's other things, how to start a business, how to take a brick and mortar business and take it completely virtual, which is a process I just went through with my dad, taking a karate studio, which he's been trained and teaching karate globally for over 5 decades, almost 6 decades, but now taking his studio and building a virtual global dojo.
This is where the ninja came from, I'm assuming.
That's correct. That's correct. So looking at those types of things that people are looking for, and then try to figure out how can we show other folks then how to do this too, and then have other programs to assist them and basically give them a detailed walkthrough if they're interested in doing that. So that's kind of how I'm looking at growing this and continue to grow and scale our businesses.
That's awesome. Any book recommendations, what you're reading now? Or, I mean, you mentioned obviously Rich Dad Poor Dad was a huge influence. What else?
I would say a great read right now, because it was basically written in the 1990s and it's unfolding again, is The Creature from Jekyll Island. From G. Edward Griffin. And basically it's the history of the Federal Reserve, banking, money, financial institutions. It's kind of eerie. The one quote in that book is the name of the game is bailout. So it's the joke of, what happens when the bank runs out of money on the Monopoly board game, right? Well, they can issue themselves money again. So he kind of brings that into it, but I would say it's just an important book to understand what money is, how money works, how the banking and financial systems work, how central banks work. Because once you have that kind of insight or level of understanding of that piece, it's going to help you to figure out basically economic cycles, what's going on in the economy. And as a business owner, that's huge. If you understand the cycles, you understand how all these things work, you could really position yourself to capitalize on many opportunities that will become available.
Yep. Yeah. Especially now with all the printing of money and and I've heard stats, I might be wrong here, but it was like, 20 or 30% of all dollars for the last century or decade, whatever's been created in the last 12 months, is this huge influx of money, which then, the dollar becomes less valuable. And so, some of the strategies to hedge against that, right, are, well, Bitcoin is one of them because that keeps growing, but then, having debt, right, good debt on an asset, because your debt then becomes cheaper, right? Because your dollar is worth less, and then your debt thus is worth less. So,
absolutely, and that's why I always say to folks that you have to have a stable of horses in your strategy, right? So you're going to have your everyday horse, the horse that you use to basically put your carriage on and or your buggy and get around town. And that's the US dollar, still the reserve currency. You need your dollars, and you need to position your cash and your capital somewhere. Then you need your war horse. When the bullets are flying, you need the horse that just puts down its head and just does what it's supposed to do. And that's your precious metals, your gold and silver. When the bullets are flying, that something that's been money for, thousands of years are going to be still money moving it. And then you need your show pony. You need a fast horse. And at this point, at particular time that we're recording this, the fastest horse in your stable is your cryptos, and especially Bitcoin, because of the several characteristics that it has. There's a limited supply, which now has resulted in it being a store of value. It's also very liquid. It also has utility. You can move big sums of money from one area to another through their system. So by positioning yourself with that, and then of getting the ancillary assets, the cash flow, other hard assets, real estate and businesses and so forth, I think you're going to position yourself very well, and you have a pretty diversified sort of approach and strategy, but you're going to need a stable.
That's great. Yeah. Horse and buggy, war horse and show pony. Creative. Awesome. Where can people connect, find out more about you and what you do?
Cashflow Ninja is a great place to just look us up. Everything is on there. There's over 700 podcast episodes, tools, resources, free video series, community information, and so forth. And if they want more information, the intellectual shortcut of infinite banking is yourownbankingsystem.com. Yourownbankingsystem.com. That'll direct them to the video series that'll walk them through all of the different strategies, how to set it up, and also all of the frequently asked questions.
Fantastic. All right. Well, cool. Thanks for coming on and sharing your story and talking about infinite banking and all the cool stuff we can do with it.
Thank you. Thank you so much for having me on.
All right. I'll talk to you.